personal income tax. Like you really have to look at the overall tax regime in a state in comparison to the tax regime in other states to which an individual or business might go. So as it relates to Massachusetts, so the surtax would bring us up to about 9%. So that's on the high side. Some of that really on the highest side of the states. But there's other aspects the Mass legislature should consider in analyzing whether to move forward with this and whether they should be adjusted before moving forward. So one, estate tax. Massachusetts has an estate tax, which is really a minority of states have them. It's the highest rate of 16% over estates worth more than $1 million. We also have a short-term capital gains tax rate of 12%. So if you add 4%, it'll be 16%. That's quite high. I mean, that may need to be adjusted, or they should think about it because that would be a very high rate when combined. Then we also have a tax on S corps. So S corps, small corporations, only so many owners, they are typically a flow-through structure, only one level of tax with generally. Massachusetts has a tax on the entity level of S corps. So those types of, the totality of the Mass tax regime would have to be considered along with, as we were talking about before, the federal tax impact and any changes there, like the SALT deduction, state and local tax deduction, the federal rates, and the like. And I just want to go back to the restriction, because if the legislature decides it is in the best interest to move forward with the surtax, whether or not some of these other aspects need to be adjusted should be considered. But the use of the federal funds may restrict our ability to do so because of this restriction that says if you take the funds, you can't use the funds to reduce your state taxes. And I just don't know how that's going to be mapped and tracked. So that could be a hindrance to making some adjustments.
And you had mentioned the S